A severe liability judgment is the single fastest way to zero out your net worth. Standard homeowners or auto policies cap liability coverage, typically at $300,000 or $500,000. If you are found responsible for a multi-million-dollar accident, the plaintiff's attorney will immediately target all non-exempt assets. This includes your brokerage accounts, non-retirement real estate equity, and even future wages through garnishment. An umbrella policy is pure excess liability coverage. It sits directly above your primary insurance limits, activating only after those underlying policies are completely exhausted. This protection typically starts at $1 million and is scalable up to $5 million or more. The policy covers bodily injury, property damage, and specific personal injury claims like libel or slander. This coverage is the most cost-effective catastrophic financial defense available to high-net-worth individuals. The umbrella policy functions as a secondary payer. Consider a scenario where your auto policy has a $500,000 liability limit, but a jury awards the plaintiff $2 million. Your auto insurer pays the first $500,000. The umbrella policy then covers the remaining $1.5 million, preventing the judgment from attaching to your personal assets. Crucially, the umbrella policy also covers the legal defense costs associated with the claim. These defense costs can often run into hundreds of thousands of dollars, sometimes exceeding the final settlement amount. The policy covers these expenses even if the claim is ultimately dismissed or settled for a low amount, provided the claim had the potential to breach the underlying limits. This coverage is generally worldwide, offering protection regardless of where the liability event occurs.
The low cost of umbrella insurance, often $150 to $300 per year for the first $1 million of coverage, is based on actuarial science and risk pooling. The insurer is exposed only to low-frequency, high-severity events. The substantial underlying policy limits, typically $500,000, act as a massive deductible. Statistical data confirms that the vast majority of liability claims are settled well within these primary limits. The umbrella carrier assumes minimal risk until the claim exceeds $500,000. This structure makes the first $1 million of excess coverage significantly cheaper than increasing the limits on your primary auto or home policies. Adding subsequent millions of coverage becomes progressively cheaper, often costing less than $100 per additional million. A plaintiff's attorney performs a detailed asset search before initiating a major lawsuit. They are looking for non-exempt assets that can be seized to satisfy a judgment. While qualified retirement accounts like 401k plans and IRAs often receive state-level creditor protection, assets held in standard brokerage accounts, checking accounts, and equity in non-homestead real estate are fully exposed. The presence of a high-limit umbrella policy serves as a strong deterrent to aggressive litigation. It signals to opposing counsel that a settlement within the policy limits is the most efficient and likely outcome, reducing the incentive to pursue a lengthy legal battle aimed at seizing personal wealth. Umbrella policies are not comprehensive liability coverage and contain specific exclusions. Business liability is the most common exclusion. This requires a separate commercial general liability policy. If you operate a side business or have significant rental properties, you must confirm if the policy covers those activities or requires a specific endorsement. Intentional or criminal acts are universally excluded from coverage. Damage to your own property is also not covered, as the policy focuses solely on third-party liability. Professional liability, such as malpractice claims, requires errors and omissions coverage and is excluded from a standard personal umbrella policy. Liabilities arising from certain high-risk activities, such as racing or operating aircraft, are also typically excluded unless specifically added via endorsement.
Carriers impose strict requirements regarding the limits on your primary insurance policies before issuing an umbrella policy. Typical prerequisites include $500,000 in auto liability coverage and $300,000 in homeowners liability coverage. If a claim occurs and your underlying policy limit is lower than the required threshold, the umbrella insurer will enforce a self-insured retention, or SIR. This means you are personally responsible for the difference between the required limit and the limit you actually carried before the umbrella coverage activates. For example, if the required auto limit was $500,000 but you only carry $300,000, you must pay the $200,000 gap out of pocket before the umbrella policy begins paying the excess claim amount. Certain endorsements are essential to close potential coverage gaps. Uninsured and underinsured motorist coverage, or UMUIM, is often available as an umbrella endorsement. This protects you and your family if you are injured by a driver who carries insufficient or zero liability insurance. Standard UMUIM limits are often low, making the umbrella endorsement critical for protecting your own financial recovery. If you own rental properties, ensure the policy includes a specific endorsement extending coverage to those premises. Without this endorsement, liability arising from a tenant injury may be excluded under the standard personal umbrella policy. Always verify if the policy includes coverage for non-owned vehicles or specific recreational vehicles you operate. The general rule dictates purchasing an umbrella policy when your total non-exempt net worth exceeds the liability limits of your primary insurance. This threshold typically falls between $250,000 and $500,000 in liquid assets. If you own assets that are easily targeted by creditors, such as significant equity in a second home or large brokerage accounts, the need is immediate. Furthermore, certain risk factors necessitate coverage regardless of current net worth. These factors include owning a swimming pool, employing domestic staff, or owning specific dog breeds with higher liability risk profiles. The appropriate policy limit should generally match or slightly exceed your total non-exempt net worth to ensure complete protection against catastrophic loss.
Umbrella policies are frequently bundled with the primary auto and home carrier for administrative simplicity and potential multi-policy discounts. However, sometimes a separate non-admitted carrier offers higher limits or better pricing, especially for complex risk profiles. Always verify the financial stability of the insurer by checking their AM Best rating. A strong rating ensures the carrier can fulfill multi-million-dollar obligations during a catastrophic claim. In a major liability event, the umbrella carrier often assumes control of the legal defense strategy once it is clear the claim will breach the underlying limits. Their involvement ensures specialized legal representation focused on minimizing the total payout and protecting your personal assets from attachment.